Good morning, good evening, and good afternoon, everybody. Hope everybody's having a fantastic week. This week, it is Thursday, and you know what time it is. It's high probability short-term profits time. And you might notice I'm not quite as excited. That's because the 16-win streak is over. But we're still at a 91% win rate. That's still pretty solid. First today, we're going to get to a quick market review. We're going to talk about, I would say something pretty important happened last night. A pretty big company reported earnings. We're probably going to talk about that a little bit. We're going to talk about some of the recent trades that we had, Shake Shack and Cisco. Then we're going to talk about a trade that we have, or trades that we have today. And then we're going to ask some of y'all for your stocks. If you have any stock ideas, anything like that, go ahead and put it in the chat. Now let's get to why you're really here. Mr. Mike Wade, how you doing, sir?
Hey, Ryan, good morning. How you doing, buddy?
I'm doing pretty good. How about you?
Good. I'm in a hotel room, as you can probably tell.
Oh, where are you going?
I'm in Galveston, Texas. Our community over at Michael Wade Trade Coaching, about 20 or so of us and partners are heading out on a cruise out of Galveston, Texas tomorrow. So I'm here a day earlier so I can do this webinar in part.
Didn't invite me.
Oh, you didn't get the invite?
No.
I just thought you ignored it.
Man.
Yeah. Ugh. So, welcome everybody. It's that time of the week, and we are still in the thick of earnings season. There have been many companies in the last few weeks and even last night and this morning that have announced earnings. And one of them, Ryan, you didn't quite mention the name of the company, but it's NVIDIA. You know, NVIDIA has a string of beating on earnings and raising future guidance. They've been blowing out earnings for months and months, quarters and quarters, and they did so again last night. And the market, NVIDIA hasn't really done too much. Yeah, thanks for putting this up, Ryan. So their earnings and revenue surpassed Wall Street estimates in the fourth quarter. And they also issued a better than expected outlook for revenue in the current quarter. And to be sure, NVIDIA also warned that global competition is ramping up. Remember DeepSeek? That's a Chinese company that came out with an AI model that they're going to make open source and free. So that put a little bit of a fly in the ointment. And we're going to watch NVIDIA at the open because it's only up a few dollars. It hasn't moved big one way or the other. And we wanted to start with NVIDIA because NVIDIA is the second largest weighted company in the S&P 500 and the NASDAQ, two of the big behemoth indices. And pretty much where NVIDIA goes, especially if it goes big, which it hasn't yet, the markets will likely follow with it. So the way I'm feeling about NVIDIA is that there's so much pressure built up. We also have tariffs. That's the other piece of market news. Trump just earlier in the week and then today reiterated that tariffs are starting again next week. So tariffs are back, 25% tariffs with China. And China is part of that, but Mexico and Canada in particular are on the slate for tariffs. So all of that creates a lot of volatility in the market. And let's take a look and see what's going on with the S&P 500 ETF, the SPYs. That's a stock that tracks the S&P 500. It's a good bellwether index that helps us understand what's happening in the 500 biggest companies in the United States market. And this is the chart right here. That's back in November, first week in November. Donald Trump took office. He won the election. And since, look what's going on in the market. I keep saying it. I'm going to keep saying it. I don't want anybody to forget it. You've got to be ready for extreme volatility. I mean, is this an uptrend or a downtrend? Well, it's no trend. It's a sideways volatile trend that has been channeling between 580 and right around 610. So we are choppy sideways. The other thing to note is right back here. This was Thursday of last week, Wednesday, Tuesday. The markets for the first time ever, the SPYs for the first time ever closed above 610 1, 2, 3 times nice hammer pattern. Most were expecting the markets to base and then make a new run up, and then Friday happened. Ryan, I flew from Costa Rica to Texas on Friday, and I got on the plane, and when I got off the plane, the markets had tanked. And that's the kind of volatility that you need to expect. It's probably going to happen again. And with all of that said, NVIDIA just announced, and traders are like not sure what to do with the stock. So the market is not sure where it wants to go either. Indeed, we can take a look at the futures and see what's going on here. The NASDAQ's futures, I'm on CNBC.com, by the way, and you can get futures in a lot of places, but this is an easy place to remember. The NASDAQ futures are up 0.76%, the S&P up 0.41%. So if I go back to the SPY chart in the Hub software, you can see here the market is up just a slight bit. All right, so we're gonna bounce a little bit at the open. We'll have to wait and see. Now NVIDIA is going to do whatever NVIDIA is going to do, so we got to wait. I do want to take advantage of those really good earnings if we can, but we've got to be extra careful. So with 9 minutes to go before the market, let's take a look at the two trades that were opened. One was open last week, and the other was open prior. And the first one, which ended up being a winner, was on Cisco. We had really good, and this software, just so you know, is Tom's Option Tools. It's a really great piece of software for many reasons, one of which is that we can visualize our trades. So we got into this trade. We sold a put spread at 62. That was our line in the sand. That corresponds to just above this light blue line. We were expecting Cisco to stay above 62. Why? Well, it came out, blew out earnings, raised future guidance, and the stock did drop a little bit, but not enough, and ended up closing higher. We got out of this trade on the 25th, which was a 12-day trade, and we nabbed right around 12% profit on that one. Now, Ryan, that trade closed after Shake Shack. Shake Shack was last week's trade, and things happen. Let me show you a live Hub chart so you can see what actually happened with Shake last week. Shake Shack blew it out. They had really good earnings. Really good earnings. The stock was up here, and then Friday happened. Our line in the sand was at 115. Okay, so we got in last Thursday. That's this day. Great earnings, great guidance. Everything was cool. And then the markets tanked big on Friday, and the stock closed well below our short strike. So Shake Shack ended up being almost a 100% loss. When the stock closes less than your short, I call them lines in the sand. It did. You should have been out of that trade on that day. If you waited to the next, you got out at a better price. But that was darn near a max loss. And that is a really important point, everybody. You got to make sure, especially in this environment, you got to make sure that you insulate and isolate your portfolio's value, meaning don't put more than 2 to 3%, 5% max of your portfolio's value at risk in any given trade. So in this case, had you done that, then, and you did take a max loss or close to it, then you would have still 97, 98% of your portfolio still intact. So that's cardinal rule number one in trading is position size. No more than 3%, maybe 5% if your portfolio is not quite as big as some others. All right, so that's an important point. We took that hit. And Ryan, let's put up our performance, because even though we took, and by the way, Ryan, that was a magnificent way to end a 16 straight trade win streak. Magnificent. Ended with a bang. Our streak is over. Let's take a look. And you can see right here, there's our sixth loss since we started beginning of 24, 14-month performance in essence. And we've had 64 trades, 58 of them winners. 91% of these trades have been winners, and we've only got 6 losers. That's 9% loss. So we typically, the system will average out to 90% wins with a 10% profit every 7 days. Now, we have just under a 10% profit over a 5-day hold period, but generally around 10% is where the system will average over time. So we finished our 16 straight wins. We had a big loss, and we are still cooking with gas 10% or 9.81% even every 5 days is a really nice machine. I like to call this get on base. You know, we're not swinging for the fences. We're not going for doubles or triples or quadruples. We just want to get our run. Get on base, make 10%. Take 379, generate almost 10%. That takes 5 days on average. You can literally take that same money and cycle it multiple times in a month. So that is the nature of high probability short-term profits. All right, Ryan, let's go back to NVIDIA. I am going to pull up a chart of NVIDIA. You know what? And I've got some support resistance lines drawn here. In my mind, this feels, you know, Ryan, you have rodeos in South Carolina, don't you?
Not that I know of.
No?
Maybe we do. I don't know.
It's the Deep South. I figured maybe. Here's how it feels to me. You know, when they have these bull riders, right? These big, massive bulls, and they piss them off while they're in the stall, ready to get to bust out into the ring. That's what NVIDIA feels like to me. This is a behemoth company. It's strong. It's beating earnings and lifting future guidance. It's kicking the competition's butt so far. Yes, there's competition coming. Analysts are saying, man, is this too good to be true? Kramer came out. I just read something. He said analysts are confused. They've never seen a company like this, and they're not trusting the valuations. There's just a lot of like, what is this? And so there's a lot of pressure. And I think NVIDIA, despite beating and raising 78%, what was that one? 78%. I read it. 78% more sales. What was it, Ryan? It was right on the thing there.
You mean the graphic?
Yeah. Let's see here. Okay, it was in there. Anyway, so I have to dig in because I can't remember what that was referring to. But 78% more sales. They're just killing it, blowing it out. And you know, any other company that blew it out like NVIDIA just did would have been at all-time highs, because this 150 level is all-time highs. NVIDIA's history has been they announce, they beat, they raise, and the stock has been sometimes dropping after earnings. So that could happen. So I'm a little bit nervous. I'm not going to go into this one. I want to give it some time to breathe. We have 2 minutes or so left before the market opens. So I'm going to watch this one a little bit in the morning here. And while we're watching it open, let's go look at one other trade. There's two potential trades for this morning, and the other one is on Sweet Greens. Sweet Green. So, Ryan, have you ever seen a Sweet Green? I've never seen one. Sounds like it's
I don't. Is it? What is it? Salad chain? I've never heard of
it.
Like
a lettuce surprise you kind of, soup and salad chain kind of thing.
Yeah. No, I've never heard of it.
Yeah, I've never heard of it either. And maybe we won't hear about it if they keep doing this. The stock is down 11% on the heels of weaker than expected guidance. And they forecast four-year revenue in the range of 760 to 780, while analysts were expecting 789. So they lowered their guidance. And if we take a look at a chart of Sweet Green, let me pull it up here. This is the Hub software I mentioned before. It's a really cool charting package. And the stock is due to open up way down here. Actually, let me get a live. I'm actually going to use Thinkorswim here in a minute. We're going to go actually place a trade on this. Let me show you. Sweet Greens is trading pre-market at 22. So it's right around 22 to open. And now we can see it. So it hasn't moved much. I was expecting earlier this morning it was much lower, but now it's gathered itself. All right, now so I'm going to watch this one too. It is down a bit. I'm not liking it. I don't see the analysts, the traders aren't taking it down despite missing on earnings and lowering guidance. So I'm going to pause on that one for a minute as well. When I was looking at it when it was lower this morning, I was looking at selling a credit spread maybe up here at 30 if you can get it. But I'd rather there be more doom and gloom, more downside movement. I can see some support at 2250 or so, right about there. It's been holding right there. It is 2250. That's where it is right now. That is a support level that has held for if it holds today, that'll be 4 days at or above 25. So I'm not trusting it. We may want to come back later and see if we like it up here at 30. So I'll come back to that one. But now let's take a look and see what NVIDIA is doing. Not much. Not much. Not much at all. There's a pattern I see as well, Ryan, that suggests movement. And if I connect the highs of these bars here, the highs of these bars, and the lows of those bars underneath, this is what we call a triangle pattern. And the triangle pattern is distinguished by a set of lower highs and a set of higher lows. And then think of a spring. As the stock gets to this point in the spring, pressure builds, and then the stock could gap either way. So that is a pattern that I'm not loving either. NVIDIA is up just a slight bit despite all that great news. So I think over the next half hour, this thing could go anywhere. So I'm going to pause for a moment on this one and give it a bit more time. We may do something with NVIDIA a bit later, but I'm going to watch it. And now I'm going back to Sweet Greens to see what it's doing. And it is now below 25.50, but early days yet. All right, I tell you what, Ryan, let's just see what's there at 30. We do have another bearish signal up here. This is the 50, the red line crossing below the 200. That is a bearish cross, and it designates a downtrend. And good God, the stock has been in a downtrend for a handful of months. So the stock is definitely bearish, but bottoming out. Don't want to bottom out and have the stock bounce. That's the thing we got to worry about. All right, Ryan, I tell you what, let's take a little breath and let things marinate a bit, and let's see if our students have any candidates that they're looking at.
Not seeing any questions in the chat quite yet. But if you do have any questions, feel free to let us know. Go ahead and put it in the chat. I'm sure somebody will put it in there in just a second.
All right. Well, I've got a few I'm looking at, man. There's quite a few today. Salesforce, tell you what I'm going to do. If you go into CNBC, they almost every day have a news post that says stocks making the biggest moves. They'll do it in the morning most of the time, midday, not always, but they're pretty good. And if you go through the list here, you can find good sniper candidates. And one that I thought was interesting was eBay. The e-commerce stock fell nearly 8% after first quarter revenue guidance came in short, so they missed. And then eBay said it expects revenue between 2.52 to 2.56 billion, while analysts were expecting 2.59 billion. So this company missed on revenue and then lowered their guidance a little bit. Now, the other sort of fly in the ointment, though, the news isn't all negative. The company also, their fourth quarter results did beat estimates. So it's mixed, not ideal. You don't want to see anything that's positive in the mix of negative news. It creates less probability. Doesn't mean you can't trade them, but the best ones are those where you get a beat and a raise and a miss or a miss and a lower. Snowflake was another that came out. The data cloud analytics stock surged more than 12% on better than expected fourth quarter results. The firm notched adjusted earnings of 30 cents, revenue 987 million, while analysts were expecting 17 and 956. So they blew it out. Their earnings were almost twice, earnings per share, almost twice what was expected. So they blew out their earnings. Don't see anything, though, about them lifting future guidance. So when I don't get the bifecta, I don't get beat and raise or miss and lower, then I look at technicals. So Snowflake may have technicals that might be lend itself well to a trade. And so here's Snowflake, and you can see here that the analysts did in fact like the news, and the stock's trading up here at about 184 or so. So that was a good reaction. And then from here, you want to identify support resistance. 190, you could call a resistance level. Technically, if you want to get the tops of these bars here, it's more like 192 or at 192.50 is the actual tops. I like to use the round numbers, and I would assume that's my resistance level. And then underneath, do the same thing, kind of look left. It's not a clean chart. So I'm going to be as conservative as I can here. And then the line that I like is this one down here at 160. Why? Well, this is classic. Look left, support, 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 support resistance, either side, highs and lows. Closings and openings right at 160, and then 2 days ago a bounce right off 160, and then the stock's rising from here. So it looks like the stock wants to stay between 190 and 160. I don't like putting on credit spreads underneath the stock if the stock is bouncing up against a resistance level. So when you see that, you can still trade them, but be ready for there to be a correction. So when I see that, I'm thinking maybe 155 would be interesting. Why? Look left, support, support. Let me put this exactly at 155. I think this could be a good trade as well. I don't love it because of the resistance above. The other piece of logic I like to use is, well, the company came down pretty hard in the prior week, and the news now is better than it was here. So you would think that the stock should stay above where it closed last night. Indeed, you can see the stock starting to make a run down. So this one is not ideal, but if I was to take it, I would look at 155 and perhaps even 150. All right, so I'd say let's lean on the side of being conservative, and let's try for 150. 150 is lower than here, which is 155. And we have other support levels here at 160 to keep us protected. That's a layer of protection, like a buffer. We've also got 170. This is the magic of the sniper system. It really relies heavily on support resistance, and most of the time it works. Most of the time it will continue to provide support resistance. Of course, that pattern eventually ends. And then also here at 180. So look, I'm just drawing lines every 10 points. And if you look left, you can see that at 170, support, resistance, resistance, support, beautiful support, support, support was breached. The stock goes down to the next support level, stops. Here, the stock is having a bit of trouble getting below 180. Good. Now, the thing I've got to worry about is this happening again. And so for all of those reasons, I would say 150 is worth a look. So let's go look. I'm going to go right into a simulated Thinkorswim environment. It says simulated up here. I'm not taking these trades. And then again, I want to sell at 150. And and let me take it back to the option chain here. Typically, we like 15-day options, 2-week options. So March 14s are 15-day options. That's where the short-term part comes in. And let's go after 150. And I can see here that there's only 6 cents, 14 cents credit currently available. And the spread width is 5 points. So sell the 150, buy the 145, 5 points difference, $5. We want at least 10% of that, which would make the minimum credit 50 cents. All right. So we're not the only way when the spread is worth 14. The only way we're going to get filled at 50 is if Snowflake retraces a little bit. It's going to have to break below 180 in order for us to get a fill. It's going to have to drop. So as the stock drops, more credit comes into the spread. So here's what you can do, and it's another trading adage. Let the trade come to you. Snowflake drops a bit more, we could get our credit, and we'll be very far away from the stock down here at 150, and we'll have a winning trade. So we're going to be very conservative on this one for all the reasons I just described, and I'm going to put a hook in the water at 50 cents. Let me show you this trade. We're going to be very conservative in this crazy market environment. All right, so March 14, 150 put, sell to open, 1, snow, March 14, 150 put, and then in the same order, buy 1, snow, March 14, 145 put, and you want to get at least 50 cents. Currently going for 16 cents. Now let me go to my little nifty spreadsheet, and let me build this for you so it's very clear. All right, so the stock symbol is snow. Oops, S-N-O-W, snowflake. And the expiration is March 14, 2025. And we want to sell the 150 put. Oops. Try that again, Mike. 150 put. And then buy. I just did all this before, but I do want to show you some data here to keep in mind. Okay, so go for 50 cents. And if you are filled on this, then you want to manage the trade. Okay, so the way you manage the trade, number one, loss exit is if the stock closes less than 150. What's 150 again? Well, it's our short 150 put, which is our line in the sand, which is right here. Now look, Snowflake's now below 180. You got a pretty good chance of getting this one, looks like. Okay, now, so that's the stop loss. Profit stop is immediately after fill, put an order in to buy the spread back to close for 10% of the credit received, which will be 50 cents if you're filled or more, and then make that a GTC, a good till cancel order, and take 5 cents. So what does that mean? That means that if this order fills, 50 cents per contract comes into your account, and then you take your profits by buying that spread back automatically. That's what GTCs are, for 5 cents, netting 45 cents per contract, which would be $45 a contract. So that is the basics. Let's go back and take a look at this other stock. Let's go back and take a look at NVIDIA and sweet green NVIDIA. It's just crazy, man. Stock that blows it out like NVIDIA did. You know, it's just like it's done the last handful of earnings. It's just baffling. It's not following the normal stock movement with the kinds of earnings that they've been announcing for quarter after quarter after quarter. So Yeah, I think given the triangle pattern, I think we hold on this one. I'm just not feeling super oriented around it. Normally, companies that have earnings like NVIDIA take off. So I'm going to pass on this one. If you want to do something with NVIDIA, I would say 115 would be as close as you want to get. But really, I'd say maybe 110. 110 is as close as I would get on NVIDIA. Some of you like to, dance with the devil and take some risk. I wouldn't do it because of the triangle pattern. But if you want to do something, you could consider 110. Stay away, man. Stay as far away as you can get. 110 is beneath 115. Look there. Is beneath 120. Is beneath the 200-day average. So logically speaking, that 110 level has several layers of support, aka protection, to keep you from getting hammered down here at 110. So if you did like it at 110, let's go take a look and see what's there for NVIDIA. NVIDIA has weekly options, which is cool. So again, we'll look at the March 14s, and then I find 110 here, and I can see there's only 7 cents. So similar, I'm not going to place this trade myself. A lot of you have been trading snipers for years now, and you know what you're doing. So if this fits your appetite for risk, you want to go after 10 cents on this. Oops, how about 10 cents, Mikey? So 10 cents currently going for 6, and that would be to sell the March 14, 110 put, buy the 109 underneath, get 10, currently going for 7. And in this case, I'll do 5 contracts, and that would make my risk $450. If you're not sure how to handle the risk reward and all that stuff, the manual has all of these calculations in it, so you can follow along. And if you haven't gotten the guidebook, we'll talk about it here in a couple of minutes. Then please grab it. And all of this math, all of this stuff I say Thursday mornings at 9:15 will be fully explained. Ryan, I'm going to have a sip of coffee and then see if there's any other stocks our beloved viewers would like to take a look at.
The only one that's been requested is snow so far. So you already went over that one.
Yeah.
Also,
I got a couple
NVIDIA
others.
NVIDIA is just
Isn't it?
wild.
Isn't it crazy?
They're just
Yeah,
all
it's
over the
like-
place.
It's like a kid that can't do anything right, you know?
Just bounce.
It's spanked all the time.
Yeah.
NVIDIA didn't do anything bad, and it's getting spanked a little bit. Why? There's some other ones here we can just quickly go through. We've got CRM, Salesforce. They came out and missed on earnings. Salesforce has come down. I didn't like this one because the stock is right at 290. So that will likely hold. It might not, but there's 290 support. Look left, 290. And then you've got your 200-day average. And the last time it hit the 200 over here, it bounced. So no blue sky to the downside. And I'd be worried about a bounce on this one. But if you do like it because of the poor earnings, I would say 320 up here would be interesting. And no closer, I'd say no closer than 315 on this one. But 320 to me would be a good level on that one. What else? Let's go back to sweet greens real quick here. See how the 22 level is holding down here? So 30 would be okay. I would rather it be Chicken Little and the stock's tanking before I'd sell. But we can look to see what's up here at 30 on this one. SG. Now this one only has 22-day options. That's okay. That's the max. And then I want to look at 30, see if there's anything there. And there's only 2 cents even at 30 on sweet greens. So I think this one we're going to have to pass on. One last thing you could try is maybe go to 27, 28, right? 27.50, 28. That would be too close for me. But, if you're aggressive on these, there's not even any credit at 28. So Sweet Greens doesn't look like that one's going to work out. I think there's one more, though. Let me see. Nutinex blew out their earnings. This is actually a pretty nice one. And if I go to the report from CNBC on this one, the cloud computing stock gained 16% after they reported, I can't read that in gray, fiscal second quarter earnings of 56%. Analysts were looking for 47 cents per share and 642 in revenue. So they beat on their earnings per share and they beat on their revenue, but I don't see lifting future guidance. If it's there, if they did, then it's usually in the CNBC report. And then from here, you got to be a little extra careful because they didn't lift future guidance, apparently. Notice 75. Resistance, support, the low of this bar here, this tail is right at 75. And that level there's a good chance that level will hold. You could come down to 70, 65. I really like it at 65. I would go no closer than 70, though. All right, so there's another one to consider, Ryan. All right, last call. Any other stocks to look at, Ryan?
Not seeing any in chat right now. So,
okay.
I appreciate you
all right.
going through all your list there.
Yeah, you're welcome. We weren't able to get a fill yet. We'll see, but yeah, it's one of those crazy markets. I want to end because I'm curious, and I'm going to just share my thoughts as I look. I'm just curious what the overall market is doing. It's hanging flat. It's just not doing much at all. So really crazy volatile market conditions. It went, another one that I'll throw out, another trading adage is when in doubt, stay out. So there's a lot of, the markets are disorganized currently. And for that reason, be extra careful. All right, now there's a guidebook. We talk about it all the time. If you want to grab the guidebook, it'll take you to the 5 steps of sniping, high probability, short-term profits. There's a link below. You can just give us your email address and we'll email it to you. And then ideally you read it and you follow along with Ryan Thursday mornings at 9:15 Eastern and trade alongside us. Lastly, everybody, I'm on a cruise with my community next week, and I will not be on the Sniper Show. We don't have a Sniper Show, a Hub Sniper Show next Thursday. So, but I'll be back the following, hopefully with a suntan. Ryan, thanks so much for all your help, brother. Appreciate you, man.
Yes, sir. Happy to help.
Yeah. Y'all have a good week, and we'll see you soon.